So people are asking me, as a trustee, how do I get money out of the trust? Like if I want to go on a personal vacation, how do I spend money out of the trust? First of all, you have to understand, a trust is created for the benefit of your beneficiaries or your heirs, right? This trust, when it's first created, the trustee is going to take all of the assets that you have earned and paid for with personal income, meaning you went to work, you paid taxes on that money, and you went and acquired your home, your car, your crypto, your real estate, your land, your gold and silver, everything, right? All of your assets that you have and all of your personal items. All of that is going to get sold to the trust for what you paid for it. So that way, when you sell it into this trust, you're not going to have to pay any capital gains tax. Now, all that money that you spent to acquire all of that stuff, maybe it was millions of dollars, that is going to go on a promissory note inside of the trust, where the trust now owes the trustee money that you did not earn any profits on, okay? Now, when the trust is new, it didn't have any money to buy all of these things from you. So we create a promissory note. The promissory note is the legal consideration that makes the transaction legal. So now you have this debt inside the trust, right? Where the trust doesn't have the money day one to pay you back yet. So essentially you are loaning that money to the trust. Once you sell your business to the trust is now generating revenue. So if I sell my company to the trust today, tomorrow my trust is making money, which means in the future, it has money to pay me back the money that it owes me on the note for all of my personal assets that I sold to it. Are you guys following me? Now, let's say I want to take a personal vacation and it has nothing to do with my trust. It has nothing to do with benefiting my beneficiaries. That is a personal expense. Anytime the trustee is personally gaining and the beneficiaries are not, you need to be using personal money for that. Well, if the trust doesn't owe you money, you're back in the matrix. You have to take income out of the trust. You would take a 1099 and then you would pay taxes on that. But in this case, the trust owes you a bunch of money. So now we can take a repayment of debt that we made no capital gains on when we made those sales, to where now I can just draw some money out of the trust. And when I file the 1041, we show the IRS, we took a repayment of debt, no taxable either.